Basically, right now, China came out and said crypto is a Ponzi scheme. And then they're saying that Bitcoin might hit zero. So if that happens, I mean, clearly, crypto in general is going to have a huge impact in terms of their market value. What's up, everybody? Welcome to episode 29 of the Batel Show. Today, we got an amazing episode for you guys because we're going to be talking about current news, if there was a recession happening, and did China just ruin the entire crypto market? Because is Bitcoin going to zero? That's a big deal, all right? So before we get into that, we want to talk about our U.S. economy and how we're doing and what's going on. So let's get into it.
I mean, bro, we just saw Goldman Sachs say that they predict a 30% chance of a recession. JP Morgan predicts an 85% chance of a recession. And then we have other economists saying they think it's going to be a 44% chance of a recession in the next 12 months.
Which is madness right now, because if those people are saying this now, I think Bad Talk actually predicted this back in March. So that's crazy, right? Here's a snippet right here for y'all. It honestly scares me because what I think about is back to 2008 when we were in a terrible position. And the way it's looking right now, it looks like we're going to go right back to 2008 and hit a stock market crash. So basically, we kind of said this earlier, right? So it's not that we're seeing the future. It's just trends that you can sometimes see that say, yo, we might be in trouble right now, so we got to brace ourselves. However, I do want to point this out. Jerome Powell, who's the head of the Fed, right? He came out and said, yo, there's a possibility of recession, but we're not sure. And then he's saying, yeah, there's a recession. So there's a lot of news out here that's really confusing when it comes to this stuff. So let's just talk about what he's doing right now and if we agree with this. So what you got?
I mean, he's aggressively increasing interest rates. We see that. And you know, and at the meeting with the Federal Reserve last week, I know he was saying like they were putting pressure on him. And his reasoning for doing this is because he wants to bring demand down. Because there's so much demand because people had so much money during this COVID time period, accumulated so much money through quantitative easing over the years, which is how they get money into the economy, right? That the demand is so high that supply can't meet it. Mm-hmm. So that's why prices have been rising up so much. So he's trying to slow demand down so that supply can catch up and stabilize prices. Now, the criticism behind that is if you look right now, inflation is really being caused mainly by gas prices and food prices. That's the biggest driver of inflation. And to be honest, no matter what demand is, at the end of the day, a lot of that has to do with supply chain issues, which is above his head. He can't fix that.
Right, because at the end of the day, I don't think anyone's going to say, yeah, I'm not demanding food anymore. I don't think anyone's going to say, I'm not demanding gas anymore. Right. The demand for those two categories is always going to be high. I just don't see a world where you're not eating or you're cutting back on food. If you have a family to feed, you're not driving to commute into work to pay gas. That's just not a thing. So the interest rate, yes, we get it. That's a way to counter inflation. But clearly it's not working when we're seeing 40-year high inflation rates. It's just not a thing right now.
It's not working. It's not working, bro. And people have less money. They still have to pay for these things. And that's when we get a period of stagflation, right? Where inflation keeps growing. By the end of the day, we're not doing much as an economy, right? We're all stagnant as an economy, but inflation keeps going.
Right.
And people are losing jobs. You see job cuts already. Mm-hmm. You see job cuts are starting to catch up, right? So I know when they make job reports, it's a lagging indicator, right? So watch over the next months the unemployment rates that's coming out, bro. Like it's gonna keep increasing unemployment. And
we had a conversation on that back before on the channel as well, talking about there's a lot of different tech firms that are doing it. Watch out for these banks now. These banks are going to be next, and if they start doing it too, what's left, bro? You got big money getting involved in cutting jobs is going to be a problem, which is why you have to basically guard yourself during this tough time period and what may occur. So now we got that out the way, right? Let's talk about the juicy stuff. What's going on with crypto? And did China really destroy the market? Is it really about to hit zero? Well, basically right now, China came out and said crypto is a Ponzi scheme. And then they're saying that Bitcoin might hit zero. So if that happens, I mean, clearly, crypto in general is going to have a huge impact in terms of their market value. So let's talk about that.
Yeah, I mean, this ain't new when it comes to China, bro. China been hating on crypto. They hated on it in 2013, and they hated on it in 2017. At the end of the day, China gets proved wrong every time. I'm not going to lie, because crypto clearly does crazy run-ups even after China says what they say. And yes, China has a huge market, but at the end of the day, crypto exists just well without it.
Right.
To be real with you. And you know they have ulterior motives at the end of the day behind why they say that.
So let's talk about it. What is the alternative motive?
I mean, so China has their own digital currency, right? The digital yuan. And so they want people to transact using that. They don't want their citizens using a decentralized currency like Bitcoin or any other type of crypto for that matter, right? So China wants to control how their citizens transact, because then they control what they buy. They can literally stop them from buying things. Like if you owe money, China can literally stop you from buying something.
Right.
And so they just want full control. You know how China give it up.
Yeah, at the end of the day, China is China because they regulate stuff, right? Like we know how they move at this point, and not saying that we're against China, we're pro-China. No, we're not saying any of that in any way, right? We're gonna stay right in the middle here. But at the end of the day, if you're a country like China and you have your own coin, why would you promote another currency when you don't make profits from that currency and you have no way to regulate it? Right. It just does not make sense, right? So if they had their own currency, which they do, we spoke about this way back in the day, if that's a thing, obviously they're going to promote it, right? But at the same time, just look back in history. When China comes out and says they banned something, yes, for a time period, of course, there's a big impact on the crypto value. Duh, it's a huge company, or a country, I should say. However, there's always a run-up, as you said. So during this time period, when things are quiet, big money staying quiet, you got countries not necessarily getting involved, you don't see CNBC going crazy, Jim Cramer going crazy, you don't see any of that happening, that's when big money is getting involved. And the way you would know that is if you are subscribed to our channel. Because on Rookie Mondays, we just did a great breakdown, I would say, right? Of different market phases and conditions. So if you're subscribed right now, you can see exactly what phase we're in, what big money is doing during this time period, and what you should be doing during this time period to stay afloat. But speaking of big money, bro, let's talk about 3AC. What we got?
3AC, so 3 Arrows Capital, they're the largest crypto hedge fund, right? So they're a hedge fund for crypto, right? And so they're in big trouble, bro, like major trouble. They were lent 15,250 Bitcoin and $350 million worth of USDC stablecoin by Voyager, which is a crypto exchange. And so now that crypto has plummeted, guess what? Now they're defaulting on their loans. And so it's tough though, because they own so much crypto and there's such a big influence in the DeFi space that if 3 Arrows goes down, that could send prices plummeting in the crypto world, even after they've already plummeted.
Yeah, I was gonna say there's a lot more blood to see, but let's just break that down, right? If you get lent crypto, because people might be thinking right now, why are they borrowing stuff? Well, they wanted to just borrow stuff like Bitcoin, so they thought it was going to go up, right? Yes, they pay an interest rate, whatever they do, but at the end of the day, they're borrowing Bitcoin because they think the value is going to go up. So when it goes down and you have to pay it back, that's a scary sight. It's imagine I lent you $10 and you're like, yeah, I'm going to pay you back, and you don't have $10, right? Now imagine that $10 being $10 million. It's a lot of pressure on you, right? So when you have to pay it back, you're going to struggle because you have to pay me interest rate. And I'm like, yo, where's the money at? If you don't have no more money, I'm going to go and say, okay, well, you have to default on your loan. And that means he has to liquidate all of his assets, meaning he himself would have to liquidate, aka give up everything he owns to pay me back. If he does that and he's a crypto fund, that means now there's a lot of sell-off in the market that could occur. What happens, bro, when the sell-off occurs?
Bro, then it's going to crash.
If it crashes, you see more red in the market, obviously, yes, crypto might go down. But this is where we come in and give you some positive news, because you know I'm positive new. At the end of the day, listen, on this channel, we try our best to be in the middle, not give you biased information. However, we want to be very clear. We do believe in crypto in general. We believe in Bitcoin. We believe in Ethereum. And there's some altcoins that we also believe in. So if all this does occur, right, there will be blood in the short term.
Wait, no, continue. I'm fine. I'm gonna cut you off.
No, go ahead.
No, I just want to say, like, I think that it'll be in anybody in the crypto's world's best interest to even try to help out 3 Arrows, or just help out any. Like, if you notice, for example, bro, like FTX bailed out a couple exchanges already because it's more of a benefit for FTX to. Yes, it's a competition, but to bail out these exchanges so that crypto can stay afloat, because FTX is an entire company based on crypto.
FTX is a brokerage, just letting y'all know that.
Yeah, it's a crypto exchange, exactly. So it's like if FTX goes down, then if the other exchanges go down, that means they're taking crypto with it. So FTX has to literally give money to their competition to keep them afloat. And so I'm just same thing you could say for like Three Arrows, the hedge fund. If they own so much crypto, they might want to get bailed out by somebody, or somebody might want to bail them out just to keep crypto afloat, bro.
Right.
Like literally, like at the end of the day, anybody involved in crypto might have to work together to just make sure it doesn't go all the way under.
This is him pitching to y'all. He's begging for his life. This is him pitching to y'all. That's crazy. That sounds bad right now. It's crazy.
Nah, we gonna be good in crypto. So honestly, not even stressed though.
But basically, that's kind of some news that's happening with big money when it comes to crypto. Obviously, that's some news on China. However, we did want to talk about Binance, right? So Binance came out, which is something pretty cool. They offered a $0 trading fee. So there's no commission that you have to pay when you actually buy some Bitcoin now, or any crypto for that exchange, right? However, there's an app that did this way back in the day in 2013, and that app was
Robinhood.
So when they did that, it caused a lot of people to start investing again, right? It caused a lot of buzz, which is dope for the markets. Well, the same thing's gonna happen with crypto, y'all. If the one exchange does it, aka Binance, what do you think is going to happen with the other ones? They're going to have to keep up to be competitive, and that's going to increase the buzz once again. And then you're going to see big money start getting involved later down the line. We've already seen so much involvement within the crypto space. We spoke about metaverse. We spoke about fashion shows that people are having virtually. Yeah. Like, that's crazy to me. We spoke about all this with y'all. And on top of that, there's ways to actually short Bitcoin itself now, right? You could legitimately do that. So let's talk about that real quick.
Yeah, man, they just released a Bitcoin shorting ETF called BITI. You know, you can pronounce it Biddy if you want to. It's a funny name for it, Biddy. You know, but you're literally betting on the fact that Bitcoin will decrease in value. So it's whenever you have big money involved now, because now that they have an ETF for that, there's going to be manipulation of that price. So that means Bitcoin might have to rise in value just so that people who are opposite of the short can make money, or they're going to have to decrease it so the shorts can make money. There's always going to be people on both sides, is what I'm trying to say. Right. So I think that's good because that includes more institutional money. The more big money that's in the space, the better it is, the more sustainable it is. At the end of the day, as retail investors, our little 500, 1,000, even 50,000 don't really do much for no prices, to be honest.
No, it doesn't.
It's all about what the hedge funds have, all the big money, because they're really talking about millions. That's what moves prices. So we need their involvement the most. Hence why, like, this whole time period, like I said, I'm really just happy that we're getting kind of a reset in crypto, because at the end of the day, bro, we need this reset so that big money could pour into it.
Yeah, and speaking of big money, Fidelity actually came out with their own ETF, right? It's actually legitimately focused on digital payments and cryptocurrency. So when you see that happening, you start, thinking that, wow, cryptocurrency actually is here to stay. We just have to be careful in how we invest in it. And that's why we always preach DCA, right? You don't have to take a boatload of cash and dump it in at one moment. You can just DCA and be successful because you're capturing different averages of the market.
Yeah, bro, and just look at the job market itself, right? All my people, I have friends in corporate, right? They always talk about these job openings that are revolving around crypto and Web3 and metaverse, right? They're looking for talent and people with expertise in these fields for a reason. Big money is trying to get involved in this field. So don't think crypto is dying. It's a huge part of our future. Everything revolving around crypto is a huge part of our future. It's just about it needs regulation. Mm-hmm. So this is just a time period right now where it's gonna be, it's gonna bring you anxiety. It's a lot going on, but have a long-term mindset. That's why we just, like we said, just dollar cost average, take advantage of the really major dips, and just believe us. And well, this is all bias right here, but believe us.
Yeah, I was gonna say, I want to make sure y'all know this. At the end of the day, don't go listening to us and buying a bunch of stuff if you don't believe in it, right? Yeah. We're not your financial advisors. Nice. We're just giving you our opinion on what we think is gonna happen. If you do choose to do it, it's on your own terms. Y'all not gonna come back at us and say, "Yo, bag talk." Y'all say that, nah. No, that's not a thing. That's not a thing whatsoever. Please be careful. Do not listen to two random guys on YouTube just because of this. All right, but make sure if you do your, investment, you can afford to lose the money that you're putting down.
Right.
As simple as that, as any other investment. But that's basically what we want to talk about today. Mm-hmm. Make sure you guys are liking, commenting, and subscribing to our channel, plus hitting a little notification bell because we drop
2 videos a week.
And you don't want to miss them. We appreciate you guys. Make sure you check out our episode on Monday for Rookie Mondays. But until then, peace.
Peace.